What's happening, y'all? I was on vacation for a week, so I decided to take a break from recording, but now I'm back at it. And I'm going to hit you guys with a query that I received from a subscriber. I was asked to talk about moving averages and what role they play in my trading. So I'm going to jump into that, but before I do, uh, thank you for those of you that continue to support, subscribe, share, like, comment, all those things. I'm grateful. And for those of you that are new here, please don't be shy. Leave comments. If you'd like for me to mark up a chart, leave that ticker in the comment section. Please subscribe, share, all those good things. Just engage in some kind of way because I enjoy engaging with you guys. But let's talk about moving averages. So I'm using Bye as an example, and I have what's called a 20 period simple moving average on right now. And first off, let me go a bit into how moving averages are calculated. So let's say that we have a series of numbers, and let's say we have a 5 period moving average. And let's say the first five numbers to use to calculate that moving average are 1, 2, 3, 4, 5. And then so once the next period comes on, that number one drops off, and then you are calculating 2, 3, 4, 5, and then whatever the sixth number is, or that fifth number, I should say. So that's how moving averages are calculated. They are a lagging indicator because it simply follows the price. So it uses past prices as uh, in its calculating, uh, getting that getting that moving average, that series of numbers. Also, the moving average allows you to see um, a smoother curve as far as the trend is concerned. So it's the moving averages are going to look different. They're going to be at different levels depending on the time frame that you're looking at. So, for example, I'm looking at a 15-minute chart, and right now the 20 period moving average is right at 100. If I go to the 4 hour chart, you'll see that that 20 period moving average, that same moving average, I didn't change the number or anything. It's at 95.84. So that's because depending on the time frame, it's gauging from the close of the candles on that time frame. So while a candle may close at 100 on a 4 hour time frame, a candle may at that same period of time, the 15-minute candle may have closed, at a different level, or not at that same time, but a 15-minute chart or candle would have closed at a different number, more than likely. So yeah, as you can see, the 20 period moving average, you see like a W type of curve here. The price is doing the same thing. However, it's not as smooth. So the moving average allows you to see that trend a lot more, a lot better. And one thing about moving averages is sometimes they can serve as support and resistance, but not always, as you can see here with this 20 period moving average. But the special thing about the 20 period moving average is that it is your mean reversion moving average. So it's typically the average price of whatever ticker you're looking at over that period of time. So a lot of times, as you can see, when the price moves above that 20 period moving average, it always comes right back down to it. When it moves below it, it always goes right back toward it and sometimes above it. So that's just something to keep in mind. When it comes to some of the more popular moving averages, you're going to have your 20, the 50, and the 200. So you'll see the 50 and the 200 thrown around a lot by talking heads when you watch financial news. And generally, the 50 and the 200 are considered major and minor levels of support and resistance. So I'm going to pull up a 2 year daily chart for Alibaba, and I'm just going to pull up the 50 and the 200. And you can see where the price is trading in relation to the 50 and the 200 on a daily chart. So you can see that today, as of today, Baba has crossed above the 50 period moving average. So uh, that 50 is a weaker level of support when compared, or resistance in this case, when compared with the 200. So the same thing applies when you put on that 50 and 200 and you see the prices trading above both of those. Then you look at the 50 as a major level of support, but not as major as the 200. So it's for the 50, it's over a period of 50, either 50 days, or it depends on what time frame you're looking at. In this case, it's a period of 50 days. The 200 is a longer period of time, so you have more data to support the price action. So that's why that 200 is going to be a stronger level. Um, let's see what else I wanted to say about that. Let's go back to the 15-minute chart. And so when it comes to the 50 and the 200, especially on the daily chart, when you see the price crossing above or below those levels, then those are warning signals, in my opinion. At least I use those as warning signals to a possible trend change. Not necessarily at the 50, but definitely at the 20. When I'm seeing prices crossing above or below that 200 period moving average, then I'm definitely looking for a possible confirmation of the trend changing, like sentiment surrounding whatever ticker I'm looking at is changing. And when it comes to the 50, then that's my warning sign that, hey, you know, maybe I should be looking to see where the 50 is trading in relation to the 20 or 200, and even the 20, but the 50 in relation to the 200. And maybe that's my warning sign that, hey, the price maybe is going to either drop down to the 200 or raise or rise up toward the 200, depending on where the price is in relation to those moving averages. So, how I use the moving averages is they can be signals. And you can choose whatever moving average works or you feel most comfortable with. I'm going to take this one off and I'm just going to change this one to, let's do a 5 or whatever. No, let's just do a 14. All right. So, what you can do, or I won't say what you can do because this isn't investment advice at all. Let's go over a period of 5 days on a 15-minute chart. So let's say I'm day trading, looking to day trade Alibaba. The way that I use moving averages are because price is a leading indicator. When the price crosses above one of my moving averages, then I'm looking for a possible bullish position. On the flip side, when the price crosses below a moving average, then I'm looking for a possible bearish position. And of course, I'm not just using the moving average itself. I'm using other context clues within the chart to let me know whether it may or may not be a trade worth taking. So that's pretty much how I use, moving averages. They basically show you what the trend is given a certain period of time. And that certain period of time includes the time frame on the chart as well as the type of moving average or the time on the moving average. So whether you're using a 5 or 10 or 20 or 21 or 50 or 200 or 100, whatever uh, moving average that you're using, it shows you what the trend is given that data input. So I appreciate you guys for watching. I hope this was helpful. I apologize for the delay. Again, I was on vacation and I just decided to not do any videos while I was away. But like I said, I'm back to it and I'll catch you guys in the next video.